Hey everyone, welcome back to Corporate Decoder. Today we're diving into the latest from Store Capital, and let me tell you, this report has a few twists that might make you question if they're selling real estate or running a very complex board game, so let's figure it out. Store Capital is a company that focuses on single-tenant operational real estate. Basically, they buy properties from businesses and then lease them back. Think of it as being a landlord for companies like chain restaurants or service shops, but on a much larger scale. This report is a 10K, which is like an annual checkup where they tell the SEC, and thus the world, how their business is doing, what challenges they see, and all the important details about their finances. The most important thing is the bottom line, so is the company making or losing money? It looks like for the year, Store Capital had a net income of about $124 million. That's after a loss of over $138 million the previous year, so things are definitely on the upswing. Now, it's not that simple. The report mentions something called the merger. What that means is that Store Capital was bought out, so the figures before and after the purchase have to be viewed a little differently. It's as if the company changed Cook's recipe. One thing that has changed is that the company is no longer publicly traded, so you can't just go out and buy stock in it anymore. One key part of any company is its people, and as of the end of last year, Store Capital had 126 full-time employees. That's not a giant number, which suggests they operate pretty efficiently. Any good annual report doesn't just look backward, it looks forward. But it also includes a ton of legal disclaimers that mean nothing's guaranteed. It notes a bunch of risks like fluctuations in real estate values, the performance of their customers, and even potential natural disasters. These forward-looking statements depend on assumptions that may be wrong, so take them with a grain of salt. One of the biggest risks they highlight is inflation. If rental rates don't keep up with the rising cost of everything else, they could be in trouble. Scroll ID equals item 1A risk factors item 1A. Risk factors/scroll. Let's dive into the risks that Store Capital thinks are most important, and that could make the company lose money. For Store, a big one is real estate values, since that's their bread and butter. If property values go down, it could hurt them. They also rely on their customers, which are the businesses leasing the properties. If those businesses aren't doing well, they might not be able to pay their rent. Another thing is competition. They face a lot of competition for good properties to buy, which can drive up prices and make it harder to find deals that make sense. Here's one you might not think about but affects their customers. Lots of Store's customers are service and service-oriented retail businesses, and those businesses may be under pressure from e-commerce. If these businesses fail to compete with online options, they may not meet their lease obligations. They are also dependent on raising debt and equity capital to keep acquiring new properties, but with higher interest rates in the market, Store may find difficulty raising debt, or it could negatively affect their return on equity. Being a REIT or real estate investment trust is also crucial for their tax situation. If they mess up and don't qualify as a REIT, they're going to be paying a whole lot more in taxes. Scroll ID equals item 1C cybersecurity, item 1C cybersecurity/scroll. Every company has to worry about cybersecurity these days, and Store Capital is no exception. Even though they don't collect the kind of data that are normally targeted in cyber attacks, a data breach could really mess up their operations, so they are allocating resources to address cybersecurity threats and promptly respond to any cybersecurity incidents. Scroll ID equals item 7 management's discussion and analyse item 7 management's discussion/scroll. Let's take a look at how the company performed in the last year. A key thing to understand is that the numbers look a little weird because of the buyout. So when looking at the company's cash flows, net cash from operating activities increased by over $97 million, as the company's real estate investment portfolio grew to approximately $15.7 billion. In connection with this growth of the portfolio, investment activity was funded by a combination of capital contributions from members and net proceeds from the issuance of long-term debt. Store Capital tries to protect itself from rising interest rates by using hedging strategies. However, these hedges might not be successful, and that could reduce their overall profit. Store plans to repay $809.5 million of senior unsecured debt in 2026 and $921.10 in 2027, so debt management will be a thing to watch for. Now let's see who's steering the ship. Mary Fedwa is the CEO and president, and she's been with the company since it started. There's also a board of directors with representatives from GIC, a global investment firm, and Blue Owl Capital. The board is actively involved in overseeing risk management, including cybersecurity. They get regular reports on these issues and seem pretty engaged. They also highlight that a downgrade in the company's credit rating would be bad and could affect the price of their debt securities, as well as their costs and availability of debt capital. Finally, Store Capital's report highlights that the company is generally dependent on customers operating their businesses on our properties. If the customers aren't following regulations, that could come back to hurt Store. Lastly, you are probably wondering if they had to correct their own mistakes. The answer is no, so that's good. Okay, after decoding that hefty report, here's my take on Store Capital. Store Capital seems to be in a solid position right now. It has a large and growing portfolio and seems to be managing its finances prudently. They are generating more cash. The company's success is closely tied to its customers, which are small and medium-sized businesses across the United States. So if the economy struggles and those businesses have a hard time, Store could see some financial pain. While their emphasis on cybersecurity is reassuring, a major risk for Store is rising interest rates. If rates go up too much, it will be harder to borrow money and make profitable deals. Overall, Store Capital seems like a well-managed company in a stable but risky industry. Their success depends on a lot of external factors and their ability to convince companies that leasing is a better solution than owning real estate. But given their current financials, it seems that the leadership is aware of and addressing the various threats. Thanks for watching. If you found this helpful, give us a like, leave a comment, and subscribe for more corporate deep dives. Let me know in the comments what 10K you want me to read next.